Hello and welcome to episode 41 of the Craving Crypto podcast. In today's episode, we're going to be talking about the top 5 things I learned during the sell-off. So let's get right into this. So the total market cap, let's get right into our technical analysis. As you guys can see, we have been continually bouncing off of that support level that we were watching. And let me just go ahead and remove the MACD really quick. If we zoom in here on the 4-hour, you can see that we did get a nice clear bounce off that support level. We did make a higher high on the short term and a higher low, and we have now made another higher high in prices. One of the things that I'm watching is Bitcoin Cash right now. If I go into the smaller time frame with Bitcoin Cash, we have a falling wedge and it's starting to break out of that wedge. So if we really get a clear break and we see upward momentum in this, it would not surprise me at all if this also follows along to that next resistance point that we've been watching since this support level that I told you guys we'd probably see a bounce on. So I'm really excited to see if we can get up above these levels because that would produce a breakout in Bitcoin. If we do go down though, I'm just equally as excited because we've been consolidating for 100 days inside of the Bitcoin triangle pattern that we're all watching. So if we can get a clear breakout of that, it would really relieve some of the consolidation off the market, increase the volatility, and that would provide us with profit. That's really what I'm excited about, what I'm watching here. There is some ascending support that I've been watching here. As you can see, it came down, hit this line, bounced. Didn't quite hit it this time, but it bounced and then it came down and it did hit it this time. So that's ascending triangle, that ascending support line. If this fails, that would look pretty bad, I'm not gonna lie, and I really vote that we're gonna go for 176. So yeah, that would look something like this. We'd reject off that resistance and we'd get a really quick drop to that 176 billion. And really, if this rejects and this fails, then that would look something like a bear flag structure that we got off this. We don't really, it would be nice if we had more points got hit. That would really confirm the pattern, but it would be pretty intense, the bear move would. Now, if this breaks out though, you guys, the move is gonna be equally intense. The first spot that I suspect us to really hit some resistance is that $240 billion level. If we come back down and find support on the previous resistance level that we found right here, you guys, I'd expect a pretty bullish impulse out of that move because Bitcoin would be breaking bullish out of its triangle. And I'd suspect these resistance levels to be tested that we really haven't seen the prices at this level since July, if it does go up that high. Either way, we've got exciting movement coming in the crypto markets, and I'm really looking forward to a resolution in this kind of movement that we've been seeing. That's my update on the total market cap. Let's head over to coinmarketcap.com and check out our top mover for the day. And just so you guys know, I've mentioned this in multiple of my videos, but just go ahead and click on the document, scroll down and look at the previous analysis that we did and compare it to the analysis that we did today. You guys can look and see kind of how accurate we've been in the past and what our thoughts were and how they might change as the market continues to develop and we continue to get perspective based on that price action. On coinmarketcap.com, most stuff is in the green today still. We've got Ether Classic, which is down a little bit, Bitcoin, which is down a little bit, but for the most part, we've got a lot of upward kind of action here with the total market cap and most of the coins on here. That Noah coin that actually dumped pretty hard, 23%. So you guys know if it's on the top mover list, you probably do not want to be buying it. If it's up 30 and 40%, that's sell profits, right? You want to take out at those levels, not buy in. Maker token looks to be our top mover on the total market cap today. So we'll just pull up Maker and do a little analysis on that. Okay, so Maker token, this is really starting to break out right now with good volume. One of my buddies and really mentors that I met early on in crypto, way before everything exploded in 2017, told me about this coin. So I actually bought it in my long-term portfolio somewhere around here when we were dropping off before we had the run up in April. So I do have some Maker token. It's not the biggest point in my portfolio. He basically told me that if there's Illuminati in cryptocurrency, they work at Maker token. So I was like, okay, I'll buy it. That seems legit. But yeah, we've got a lot of good volume right here in the millions. and we're starting to get that breakout. We did have a pretty big consolidation pattern. This did have some wedging structure to it. It's a pretty big, not very steep wedge that happened, similar to the one that was forming in Bitcoin that we're watching to either get a breakout of or a bear break. But either way, this one is really starting to pick up in momentum. I really think that these previous resistance points are going to be your best bet to take your profits at on the short term. But this could be the beginning of a bigger picture trend reversal for Maker. So it's definitely on my watch list. And like I said, I hold this one in my long term. But just be aware not to be FOMOing in on the short term and watch for these resistance levels to kind of get hit. Yeah, that's Maker token, and that's our review of the top mover for the day. So now let's get into the lesson, which is my top 5 mistakes that I learned in the correction and in the sell-off for the cryptocurrency markets. So I'm going to get right into this. It's going to be really useful. I really wanted to make this video to let you guys know everybody makes mistakes. I'm far from perfect. I make mistakes every day in trading, and it's just part of the game. But if you learn how to identify those mistakes and kind of get one-on-one with them and learn from them, they can be your biggest tools. So that's what today's video is about, is the mistakes that I learned, and hopefully this can provide some value for you guys so that you can use it with your analysis and take these so that you're really prepared for the next run up. Yeah, let's get right into this. Number 1 is not waiting for breakouts at resistance. So I'll just go over to the Bitcoin chart. So one of the mistakes that I made was expecting a breakout at resistance for Bitcoin due to a head and shoulders pattern and a volume profile that I was watching. So if I just go ahead and take this tool, you can see that Bitcoin was making an inverse head and shoulders pattern right here. Now I was expecting a breakout of this level and that we'd have more upward movement to come. I was seeing this as a 1 and a 2 and a 3 and a 4, and I was expecting a 5th wave to really take us up to the $14,000 levels with Bitcoin. Now we did not get that breakout, and really what I learned from this mistake was that I was expecting upward movement when we were meeting major resistance before we had a clear breakout above that resistance to buy on the dip. So it was just one of those things where I was using a trading pattern. We had just run up a lot in the markets. So the emotional factor of feeling all of that money come into the markets also made it feel like we would return to that trend quicker. And so that's kind of where I made a mistake on Bitcoin. Looking back on this, there was a lot of resistance in that level. Once we started to reject, I did go ahead and update that we could probably see some lower lows or maybe even a double bottom. We did get a little bit of a bounce off that support level, but that was just one area where I was expecting a breakout and we were at a major resistance point. So I was jumping the gun a little bit, and that was a place that I learned from and made a mistake in my trading. So another thing that I really learned a lot from in the correction was improvements on my risk management and capital preservation. This was something that I was fully aware of and applied in my trading before the correction, but when things really drop off like this, your portfolio starts to get crazy quickly and stops start to get triggered, and you really just have to step back, look at your risk management strategy, analyze how you're placing your stop losses, be aware of how much tether you have in the market, and focus on that capital preservation. So if you start to take positions and you don't have your risk management in place and your capital preservation, and then the markets continue to see downward movement, it can really wreck you. So that's why I brought this up as a point, something that I had to make big changes on with myself and analyze the way that I was doing my risk management. So another really big mistake that I made was keeping the majority of my investments in only cryptocurrency. I do own some silver and some cannabis stocks and a couple stocks, but the majority of my investments were fully in the cryptocurrency markets. And when they crash like that, it just really affects the way that you view it. If I would have had maybe half of my portfolio in the stock market, this would not have affected me as much as it did. So that's something that I have personally made changes on, and I really think you guys could look at as well. The stock market and other investments, as long as you're playing really good bullish trends and accumulating into them, it can take some of the stress off only having your money in crypto if crypto markets see more volatility or dropping in prices. So that's one big thing that I changed and learned from due to the correction. Number 4 is expecting a bullish trend to return early. Obviously, I am still expecting a bullish trend to return in these markets, and I really think that this correction was a shakeout before we get the real bullish movement in the crypto markets. But again, you guys, and when we bounced off this point right here and started to go up, I took some of my profits off the table because I knew that we'd have to retrace a little bit, but I was expecting this to be a 1 and a 2 wave before we go in for another impulse. So that was me jumping the gun a little bit on the markets, expecting it to return to its full bullish trend before we had really shaken out all of the FOMO. That's something you really want to be aware of. It's hard, especially if you're invested in it, to not expect it to do a breakout, especially when prices are rallying. The psychology behind it makes you think that you're going to return to a trend sooner. But once you're aware of that, and once you start to make changes on your own psychology and take notes of your own psychology, you'll start to be able to adapt better and reduce the amount that happens to you. Nobody's perfect. We're all human. You're going to experience emotions. You're going to make mistakes. But the more awareness you put on those mistakes, the better you are going to be able to think and make decisions in these types of moves. So that's one big thing that I learned, is allow the trend to play out. Don't expect it to return to its bullish trend until you get that clear breakout. This kind of goes along with not waiting for breakouts when you're at major resistance. And the last thing that I really learned from is not selling enough shitcoins in my long-term portfolio. My long-term portfolio, I had really diversified into a lot of different coins because I saw good long-term value in them. And I should have been more careful about weeding out what coins that I had. And when I knew that we were doing some short-term overvaluation, I should have taken more of my shitcoins off the table in my long-term, because my long-term portfolio really did see some intense corrections from those shitcoins. And when coins retrace 90% in value, it's kind of hard to watch that. So that's another thing that I've changed, is taking those shitcoins off the table, reducing, concentrating into the ones that I really am confident with. In the next run up, I'm really going to make sure that I don't get too diversified in too many shitcoins, because it can really affect your portfolio when things start to drop. So I hope that these things can really give you guys some perspective. I know that you have all probably learned a lot from the correction. I know that all of your portfolios have been affected. The main goal here is to take what we can learn from this, take the strategies that we know work in the long term, and apply them to our trading today, and try to learn from all of this, because that's all you can really do. If you're in it for the long haul, then you cannot get stuck on mistakes. You have to be able to look past them, grow, and become a better trader because of them. So go ahead and comment down below your #1 mistake that you learned from the correction and what you are changing to be a better trader because of this. I would love to hear you guys' thoughts and what you have learned from this whole move. So if you like what I'm doing, you can go ahead and sign up for Binance with my referral link. If you want to click on the coin market cap chart that we did analysis on today, the link is right here. We've got Coinigy if you want to do technical analysis on altcoins, and BitMEX if you want to do leverage trading. Bitcoin address if you like what I'm doing, you can send donations that way, and the VIP course if you want to get more hands-on with your trading. Hey, thank you so much for tuning in today's video. I hope that you learned something. If you have any questions at all, drop them in the box below. Hit that like button, hit that subscribe button, and I will see you guys in the next videos. As always, stay profitable out there.